board, Commodore P.R. Hari from Indian Navy as well. He's also the chairman and managing director now at Garden Reach Shipbuilders and Engineers Limited. Commodore, hi, good afternoon. Really appreciate you joining us on ET Now, finding time and talking to us about how the entire defense sector is poised at the moment. Given the entire fillip that the industry is seeing at the moment in India, Commodore, do you expect that this run rate of 25% growth that you have delivered is likely to accelerate from here on? Should we expect growth rate of 25 to 30% for the next 3 to 4 years?
Thank you, Anisha. Before I answer this question, let me start on a positive note that today Indian defense manufacturing is at the cusp of a major transformation. And we at GRSC, Garden Reach Shipbuilders, being a premier warship building yard, are right at the epicenter of this transformation process. Our order book currently stands at around 23,500 crores. And this order book comprises of 7 projects, including 2 export projects, totally consisting of 24 platforms. With this kind of order book, our position is healthy, and this order book will last till 2027. But the future is looking bright, considering that both the Government of India and the Indian Armed Forces are fully committed towards Atmanirbharta. And that gives us hope and confidence that the orders on the anvil will keep our order book filled in the coming years. Now, coming to the revenue growth, as you had rightly mentioned, we had registered a substantial revenue increase from financial year 2021 to 21-22. We are very confident of maintaining the same trend in FY23 also. And the Q1 results have been very encouraging, and we are moving in the right direction.
Commodore, okay, thank you so much for putting it in perspective of how the defense sector is placed. But since you pointed out that the order pipeline is looking quite strong, could you give us a bit more insight? What's the current order book? What's the pipeline looking like? Which verticals or which vessels are likely to increase the order pipeline going forward?
Okay, the current order book, as I had mentioned, is around 23,500 crores, 7 projects, 5 domestic, 2 export, total 24 platforms. And the major chunk of this order book is from the Indian Navy, and we are constructing 15 warships for the Indian Navy. That includes the prestigious P-17 Alpha project, 3 ships of this project for approximately 19,000 odd crores, and 8 anti-submarine shallow water crafts, and 4 survey vessel large. And we have also been declared L2 in a bid for next generation OPVs, and things are moving in the right direction, and we expect to conclude this contract during the current financial year. The order value will be around 3,000 plus crores. Now, what is on the anvil? We have Navy expected to give the RFP for the next generation corvettes, 8 of these vessels, sometime early 24. Plus, the Indian Coast Guard coming up with 14 fast patrol vessels and 18 follow-on fast patrol vessels. That is, 32 vessels are coming from the Indian Coast Guard in the coming years, that is 2023 and 24. In addition, there is a project of the Indian Navy for a hospital ship, again on the anvil, plus 2 landing platform docks. It's a major project, which we expect the RFP to be out in FY24. So, in a nutshell, the orders that are likely to come in the next 2 years could be to the tune of 60 to 70,000 crores. But of course, this will be, we expect them to be on a competitive bidding basis with all of us, 3-4 defense shipbuilding yards, plus Cochin Ship and a couple of private players bidding for these orders.
Right. Sir, do you think the order pipeline has improved substantially, aided by next-gen offshore petrol vessel tendering? Is that something, which has completely changed the outlook over the next few years?
Thank you, Pankaj. As far as the next gen ocean-going petrol vessel OPVs are concerned, we have already been declared L2, and as per the tender conditions, we'll be getting 4 of these ships. But the order value is moderate; that is around 3,000 crores only. The big ticket items are the next generation corvettes. 8 of them are coming. The DAC approval has already been accorded. The total order value is around 36,000 crores. 8 ships split between 2 shipyards. So whether we are L1 or L2, the quantum of order book is going to be substantial. And here we stand at an advantage, having built and delivered 9 vessels, which are all of them are in active service with the Indian Navy, both missile corvettes and anti-submarine corvettes. And we intend utilizing this experience and the resident expertise to bid in such a manner to win this order.
Definitely, Commodore, that we'll keep watching out for, and we expect to speak with you soon as and when that, order inflow really develops. But apart from that, we understand that you're also looking at increasing your exposure when it comes to the ship repair income. Can you talk to us about where do you see the revenue contribution moving as far as that segment is concerned?
Yes, Anisha, and ship repairs is an area where we have been giving a thrust over the last 2 to 3 years. And as a step towards providing impetus to ship repairs, we have taken 3 dry docks. And in any ship repair or shipbuilding industry, dry docks are a major asset. And we have taken over 3 dry docks from the Kolkata Port Trust and set up a dedicated vertical for ship repairs. And the results are there. And we almost had 100% occupancy of these docks during the last 10 to 12 months we have been holding these docks. And we have also started bidding and winning orders, both for Indian Coast Guard and on the commercial shipbuilding, ship repair segment. I expect here the margins are very high. So I intend focusing on this area. And I am very confident of increasing the revenue at least by 200 to 300% in this segment in the next 3 years.
Looking at scaling the repairs business by 2 to 3 times over the next 2 to 3 years, but you mentioned that this business comes at a higher margin range of 15 to 20%, and would that help to take the consolidated revenue of the company towards the double-digit mark going forward?
See, our major business, my core business, primary job is warship building. Over 95% of my revenue comes from warship building. In warship building, the margins hover around 7.5 plus percentage. In case of ship repairs, as you rightly said, the margins are 15 to 20%. So if you're comparing 95% of the volume coming from shipbuilding and 5 to 7% coming from ship repairs, you can interpret that the overall impact would be minimal.
Okay,
another
Commodore,
interesting thing I would like to...
Sure, go ahead, please.
Another interesting thing, now that I'm given an opportunity to speak, is that we got listed on 30th of October 2018. And when we got listed, our market capitalization was around 900 crores. And recently, this month, we have touched 5,000 crores, registering a growth of around 320%. So this reflects the confidence that the investors have on us. And with a very healthy order book, current order book, and what we are very confident of getting in the coming years and a very clear execution strategy, I am confident that the growth trajectory will be maintained.
Commodore, and your confidence is rubbing on to the stock price today as well. It's up around 5%, and as you pointed out, since listing, the stock has become 3x of where it listed. So really appreciate you joining us and discussing with us the overall strategy for the company going forward.